So, that classic problem if you run a tiny business. You need a loan, say, for inventory, but the big banks, they just won't even look at you.
Not without 3 years of audited accounts and a mountain of collateral you just don't have.
Exactly. It's that missing middle.
Yeah,
Too small for corporate banking, maybe too complex for a personal loan.
a huge, huge gap in the market. And the company we're looking at today, ANEXT Bank, is betting everything on filling it.
Right. We're diving into a new research report by pvtIQ, that's Private IQ, on this Singapore-based digital bank. And our mission today is to figure out how ANEXT, which is pronounced ANEXT, by the way, how they're actually managing to serve these supposedly risky businesses.
And more importantly, whether their tech actually lives up to the hype. Because the data shows this really interesting split between their financial growth and what their users are actually experiencing.
Okay, let's start with the strategy then. They keep talking about embedded finance.
It sounds like, corporate jargon, but in this case, it's quite literal. They aren't waiting for a shop owner to go find their app and apply.
They're going to them.
They're going where the business already lives. So if you sell on a platform like Shopmatic or Delivery Chinatown, ANEXT is already integrated. It's right there in your seller dashboard.
Ah, okay. So that solves the biggest problem in lending, which is finding the customer in the first place.
It solves that, and it also solves the credit assessment problem because they can see your cash flow in real time. They don't need your bank statements. They can see you sold 500 bowls of noodles last week.
Which is how they can offer this zero-document loan application for anything under, 30,000 Singapore dollars?
Exactly. It's almost unheard of. They use Ant International's tech, they call it graph intelligence, to make these near-instant credit decisions.
And what about the pricing? The report mentioned something pretty unique there.
Yeah, their flat pricing model. In traditional banking, the biggest clients get the best rates, and the little guys, well, they get squeezed.
Right.
ANEXT just standardizes the interest rate. It takes away that whole intimidation factor of trying to negotiate with a banker.
So the whole pitch is, we're easy, we're fair, and we're already in your software. Does the pvtIQ data show if it's actually working?
Oh, it's working. The growth numbers are aggressive. Their loan book jumped 281%.
Wow, 281.
To 847 million Singapore dollars, and customer deposits doubled to 906 million.
I also saw that their cross-border transactions are up sixfold. They're serving these so-called micro-multinationals.
It's a great term, isn't it? Tiny shops that still have to pay suppliers in, China or Vietnam.
Yeah.
But we have to talk about the cost of all this.
They're losing money. The report said a net loss of 37.2 million Singapore dollars.
Which sounds pretty scary. But for a digital bank in this growth phase, you have to look deeper. The key metric is the cost-to-income ratio.
Okay, explain that.
In 2023, for every single dollar they earned, they were spending $1.87.
Ouch.
But in 2024, that number dropped to $1.16. So they are still losing money, yes, but they're getting dramatically more efficient very quickly. That's what investors love to see.
And speaking of investors, this is where the pvtIQ report gets fascinating. They have these proprietary scores that seem to tell two completely different stories.
It is a massive disconnect. On one hand, their pvtIQ Smart Score is a 4.4 out of 5. Very strong.
And that's driven by what?
Huge capital backing from Ant Group. We're talking 675 million Singapore dollars and a gigantic market opportunity. Everything looks great on paper.
Yeah.
But then you look at their pvtIQ alt data score and it's much lower. And the specific metric dragging it down is product affinity, which is just 2.9 out of 5.
Okay, what does that mean in the real world?
It means their Google Play Store rating is only 2.7 stars.
2.7?
Yeah.
For a tech-first bank? That's really low.
It is. The user reviews are full of complaints about a buggy interface, problems logging in, just basic usability issues. It shows their vulnerability. You can have the smartest back-end AI in the world.
But if your customer can't open the app to check their balance, it doesn't matter.
Precisely. They've nailed the financial engineering but are fumbling the actual user-facing part.
So, to sum it up for you, ANEXT is making huge strides in capturing that missing middle by making banking an invisible utility. Something that just happens inside other apps.
But they're also a case study in how having deep pockets doesn't automatically buy you a 5-star app experience.
Which really signals this shift, right?
Yeah.
Where the bank is no longer a destination, but just a function within your software.
Absolutely.
And that leaves us with a final thought to chew on. If financial services become totally embedded in the tools we use every single day, does the brand of the bank even matter anymore? In 5 years, will you even know who is funding your business, or will you just click accept to get back to work?
That is the multi-million-dollar question.